All right. Welcome, everyone. Welcome to this episode of our Market Wrap. I have with me, of course, Mr. Pankaj Pandey. And interesting week. Last 2 days of this week were particularly interesting. We saw the hopes were getting higher and higher, and then suddenly the markets came down. Where as of now we are standing somewhere around 24,700. Sir, what happened and what's the outlook right now?
Yeah, yeah. Hi, good evening, Vishu. Yes, last 2 days have been quite eventful for the market, and actually because of the geopolitical developments, what we have seen. In that process, Nifty has come down by 1.5%. Even the broader markets, especially mid caps and small caps, are down 1.5%. And we've seen sectors which have been doing very well, especially the interest rate sensitive sectors, like, say, for example, real estate, financials, and auto. They've sort of witnessed profit taking, whereas I think IT and pharma have regained some of the lost ground. But I think because of this Iran-Israel challenges, the Brent crude oil prices had jumped to about 17 or 18 odd percent to $78. Now it has sort of cooled off. But yes, this is also again propped up the gold to new highs. Overall sense is that, see, this geopolitical worries are going to sort of drive the market sentiment in the near term. But having said that, we don't see major impact for us and impacting longer for us. So from that perspective, we believe that the supports are placed at 24,500 and resistance could be about 25,200. Historically, whenever we have these geopolitical issues, markets have seen or witnessed knee-jerk reaction, and whosoever has bought at those lower levels, we have seen that it has been quite remunerative buying at those lower levels. And I think some bit of a retracement was also expected given the market had rallied about 16 odd percent from April lows. So if you are losing, say, about 20-25% of those gains, I don't think that's considered negative. But yes, geopolitical tensions are probably going to impact next week as well. So any development on that front is needs to be watched for. Crude is another variable, though our sense is that unless Israel does not target the oil installations, crude oil prices may not materially sort of shoot up. But having said that, yes, you have other events like bilateral trade agreement between India and US, and you keep listening or keep hearing news from the Trump. So that is always going to keep the markets more volatile. But I think geopolitical developments are going to sort of shape up the market events or market direction next week.
Absolutely. I think another highlight of the week was inflation. What were the key readings, sir?
Oh, yes. So I think inflation has been sort of trending lower for the past 7 months. Now it is down below 3%. So April month before it was 3.16%. Expectation was closer to 2.95. So inflation is even lower than that. And the decline in inflation has to be attributed to food inflation. Food inflation was double digit in October 24, and it has sort of come down to below 1%. And that is sort of largely sort of contributing to the overall decline. While the core inflation is flat at about 4.21%, and I think RBI has been highlighting that for the entire year, the inflation is expected to remain below 4%. So we are very comfortable with this kind of inflation number. And also the sense is that crude oil prices are not going to stay high for a longer period of time. So from that perspective, also we don't have, or at least I don't carry much of a worry from the inflation perspective because of crude.
Absolutely. And what do the mutual fund monthly flows say right now about the situation?
Well, when you sort of read the headlines, it talks quite negative, but let me highlight the positives first. So I think SIP inflows are quite robust, so at about 26,688. Now, when you sort of look at the net inflows, so net inflows are down to about 19,000 odd crores compared to 24,000 odd crores. And if you sort of strip out the NFOs, then the net inflows are down to further down to about 16,300. Now, again, one needs to sort of see the historical pattern. We have seen that whenever the market after rally experiences a decline, then subsequent months you see a good amount of buying. And whenever the market sort of recovers after those declines, initial few months, people tend to sort of book profit. And that is what has also happened. So we have seen redemptions were higher by about 5,000 odd crores. And since last 1 year, markets are at similar levels. So some bit of a fatigue is also there in retail investors. So that has sort of led to profit taking. And I think the gross inflows were also lower at 2,700. I think when we look at the core categories, the inflows are largely sort of resilient, be it mid cap, large cap, or small cap. So from that perspective, I really do not carry much of a worry from the domestic flows perspective. And like I said, historically, whenever we have seen markets sort of rallying after a long decline, then that is where people tend to sort of book profits. And that is what has happened. Hopefully, these numbers will start looking better. We have already seen market sentiment and market breadth improving.
Right. And talking about government capex, we saw a lot of announcements in the budget, of course. And how has that been turning out in FY26 so far?
So, Vishu, Capex has been the hallmark of this government, and we've been liking this Capex theme for quite some time, and we feel that for next few years also Capex is going to remain very much relevant. And when we sort of look at numbers, just to give you some color, overall capital expenditure in our country is somewhere about 29-30 lakh crores for FY25 if I look at. And 11 lakh crore is what is done by the private sector. About 10.5 is from the center, and about 7.7 or closer to 8 lakh crore is by the state government. Now, this is the first year we have seen that the private sector capex being slightly higher than the government capex, and this has happened after a long period of time. Overall sense is that the private sector capex is expected to be higher, especially in the second half when we'll have a lot of these worries behind us, be it tariff related or other geopolitical issues. So from that perspective, it is good that the private sector started to contribute. In years like say 2010, the private sector capex used to be 4x of what the central government capex was. And with corporate balance sheet being good, so we feel that capex is as a theme is here to stay. When I look at the near-term number, the April capex number is 60% higher compared to last year. So it's about 1,60,000 odd crores. So mind you, for the entire FY26, the central government's capex is about 11.2 lakh crore, and they've already done 14% of it in this particular month of April itself. Last few months, the government has been pretty active on the capex front. They've done capex of nearly 7.5 lakh crores. Contrary to that, the first half was quite soft because you had multiple elections last year. So I think capex as a theme is going to remain there because for us, for our economy to sort of go from say 4 to 7 trillion, I think capex is the must, and which is why I feel that this is one theme which is going to remain relevant for a good period of time. And I'll highlight some stocks. So obviously L&T is one of the biggest companies. They've got an order book of nearly 6 lakh crores. This company is expected to grow at 15 odd percent. So that is one of the picks. Then on the transmission and distribution side, KEC International, this again company has got a 40,000 crore kind of order book. And pipeline is also pretty good. Bid pipeline is about 1.8 lakh crore, so it can easily grow at 14, 15 odd percent. Bottom line growth could be higher because of the margin expansion. And there is a small company called LG Equipment. So it's a company which manufactures compressors. So this company also is expected to deliver high teen kind of a growth. And again, they have been looking to launch products domestically to sort of ward off the Chinese competition. So that is another company which is looking good. The other one is Techno Electric. This is one company on the EPC side related to transmission and distribution space. This company has grown nearly 40 odd percent last year. We feel that it can sustain those kind of a growth. So that is another company what we like. So capital goods as a theme is started to sort of look good, and I think we are also drawing confidence from the fact that RBI is also making all the efforts for growth to sort of revive. And from that perspective, I think capital goods is going to sort of anchor that growth.
Absolutely. Talking about power as a sector, what do you see coming up?
So yes, Vishu, power is also a very important sector from a capex perspective because this is one of the heaviest or the sector which is doing the heavy lifting of the overall capex. And government also has been sort of coming with some effective measures to sort of improve. So just to sort of highlight in terms of what we have achieved in the last, say, 10, 11 odd years from 2014 to now. So one is we have doubled, almost double our capacity to about 475 gigawatt. Uh, the power availability in a overall India basis has improved to about 23 and a half hours. And highlight is again when you look at the rural segment in 2014, the power electricity availability was 12 hours, which is now improved to nearly 22 hours. So significant improvement. TND losses have come down from 26 to 16 odd percent. We have increased transmission line by 70%, transformer capacity by nearly 140 odd percent, and we are at about 3 crore kind of a smart meters, and now the current pace is nearly 1 lakh, more than a lakh kind of smart meters per day. So we are adding closer to about 4 crore meters on a yearly basis. Now, some of the measures what the government has taken to improve the growth of this sector was the right of way issue was a challenge for adding new transmission line, and which is why government has come up with a compensation guideline where the compensation for tower has gone up from say 85% to 200%. So for the land for where the tower is going to set up, and for the corridor where the transmission line will go through, the overall land value there has been sort of revised to about 30 odd percent from say 15 odd percent. So obviously this is expected to accelerate the transmission capacity addition. Then we have announced, government has announced a VGF of nearly 5,400 crore for battery storage capacity. And I think then there are mandatory targets for a lot of sectors which are polluting to sort of improve their green energy mix. So that is another. And then the government is also talking of ultra high voltage alternating current. So there they have identified some 9 lines and with a capex of nearly 50,000 odd crores. And again, I would want to highlight that to play this opportunity again, big companies like say NTPC, which contributes nearly 25% of the overall capacity, can be looked at. That company looks good to us. Similarly, on the transmission and distribution side, you have Power Grid, which looks good to us. This company overall has laid a capex plan of nearly 1 lakh crore in the next 3 years. And then I think, last but not the least, a private sector player like Tata Power. I think this company is having a capacity of 50 gigawatt, looking to add about 10 gigawatt. And I think another thing is that they are talking of mid-teen kind of a growth rate going forward. And on top of it, they are looking to venture in newer areas like, say, nuclear reactors. So all in all, I think capex plus within capex, power is one sector where I think the government is focusing a lot more because of to do the heavy lifting for the overall capex.
Right. So last week we discussed about the RBI policy, of course. It's been a week since. What does the banking sector look like right now after the policy?
So I think if I have to sort of put a number, for example, for a bank like HDFC Bank, if a CRR cut was not done, then the overall sense was that their pressure on NIMs would be somewhere about 12, 13 bips. But with CRR cut and with the kind of cut on the fixed deposit rate they have taken, now that will be sort of minimized to about 3 bips. But I think the highlight is again PSU banks, because see, when we look at private sector banks, for them, the proportion of external benchmark linked rates is somewhere about, or loans are linked at somewhere about 40, 45 odd percent. For PSUs, that number is higher. And which is why I feel that for PSU banks, in fact, you will see a NIM improvement. So for a bank like say Indian Bank, on a similar apple to apple comparison, we would expect their overall NIM to sort of improve by 3 odd bips. And so from that perspective, I think PSU banks are a better cohort to sort of look at from this overall CRR cut. Uh, and I think growth rate wise also, they are not sort of too much behind compared to the private sector counterparts, and which is why A bank like SBI, which can deliver an ROA of about 1% looks attractive to us with a target price of 940. We have already given a bank like Indian Bank. So this is another bank which can deliver 1.2, 1.3 kind of ROA. And even if it is valued at 1.1, I think we see a decent upside there. So PSU banks, according to us, in this scenario, at least for the next 3 to 6 months or probably 9 months, relatively look attractive compared to private sector counterparts on account of the fact that their margin decline is going to be lesser compared to private players.
Absolutely. Sir, there's a issue of China and the rare earth materials that they provide to the entire world. It has been coming up in the news again and again. Can we have an insight from you into this issue and what are the implications for the world and for us?
I think one simple thing is that world needs a China plus one strategy, and I think that even applies to us also because when we are importing so much of a motor or rare earth magnets, literally is 18 to 90% of our requirement from one single country. So, which is where I think the challenges have emerged, and we all know that China has been sort of arm twisting a lot of countries, including us. And now, again, so the rare earth magnets are specialized magnets. So these are high density, extremely high electrical conductivity magnets, and they are typically used in EVs and hybrids. And I think till mid of July is what we'll have a stock, and probably then things will start getting impacted. So there are a number of ways to sort of mitigate. One of them is obviously recycling the existing ones or looking at alternate locations. But that again is also sort of a challenge because the entire world is also looking at some of those additional supply lines. And obviously, the third one is talking to China. The way US has cut a deal, probably we also need to sort of cut a deal there. But I think there are some other technological solutions also because what we have seen is that, again, there are some Indian players who have come up with an alternate for this. So one is the light rare earth magnets, which can be used and which are equally effective. The other is that they are substituting these magnets with magnetized electrical coils. So some of the players are working on there, and I think by FY27 it is expected that India will have a decent backbone to sort of support that initiative because quantum-wise, it's not a big import item which is there, but from a nuisance value perspective, yes, it is a irritant and a bit of a challenge for the auto industry in the interim, with no near-term solution as of now.
Absolutely. Sir, finally, now it's time for the hidden gem of the week. Which will it be this time?
So, Vishu, since I have spoken a lot about Capex this week, and I believe that Capex is going to be a theme which is going to remain relevant. So, I want to highlight a stock called Techno Electric. Here, the target price is 1940. This company is an EPC company, operates in industrial segments like, say, energy transmission, distribution, and generation. And on top of it, they have also ventured into data center space, which again is one of the hottest segments to be into. Last year, they've grown their top line by 51 odd percent and bottom line by about 40 odd percent. And they won orders nearly more than 4,000 odd crores. They've got an order book of 11,000 odd crores. And I think overall sense is that their bid pipeline is also pretty strong over the next few years, about 1.5 lakh crores. So from that perspective, this company is in the right domain, slated to sort of capture a good amount of opportunity. On the data center side, they're expecting to commission 25 megawatt and 50 megawatt of data center capacity in the next 2 years, which is FY26 and 27. And they're looking to sort of invest about 8,000 odd crores over the next 5-6 years. Overall sense is that this is one of the few companies which is going to deliver pretty high growth rate of nearly 40 odd percent, both top line and bottom line, and trading at attractive valuations under 40 for FY27. So from that perspective, we like this company with a target price of 1940.
Absolutely. Well, that was it for this week. Thank you so much, Pankaj sir, for your insights. And thank you so much, everyone, for watching. If you have any questions, please put them down in the comments and we'll try to get back to you. Thanks again.
Thank you so much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.